Welcome. We are back doing the thing, charting literally any asset you want me to chart. So type in chat if you have a recommendation or a request. I'm going to be starting off with Bitcoin, but I'm going to be going through Bitcoin, SPAQ, VLDR, some other cryptocurrencies, a bunch of different stocks, doing the full rundown. If you support what I'm doing, make sure to hit the subscribe button, but let's get right into it. So just reiterating on what I was talking about yesterday, I posted Bitcoin on my Twitter at 10,800 when it broke out right here, and Square bought about $50 million worth of Bitcoin, and ever since then it's literally been like a straight line up, aside from this big not big but decent consolidation area. You broke this 11,500 resistance and you literally went all the way to 13k in, let me see how long that took. Pull this out. So after you broke that, within 3 days, because I kind of extended it. Hold up, let me fix that. Yeah, within about 3 days, you went up about $2,000 in value. Absolutely crazy. And I charted 13,200 as my resistance, because if we come all the way back to the summer of 2019, you can see that on July 10th, we actually failed to break that level. So I charted both 13,200 and 13,900 as resistance levels. And coming back to where we are right now, that's exactly where you've been reversing. Now, one thing I've been looking at that I actually tweeted about, my Twitter's in the bottom left if you want to follow me, I post daily. The MACD is about to cross over. I mean, it's not 100% confirmed if you start catching bids at this level, with this actually nice looking kind of like pin bar candle on the 4 hour that's going to be closing in like 8 minutes. So maybe that could be a little bit of a strong point for the short term, but the MACD just does not look great, and you kind of failed to break this 13,200 level I'm talking about. So what I'm expecting is maybe like a bull flag or some sort of consolidation, like how we saw over here around 11,500. And that could pretty much bring in more demand and bring us even higher prices. So that's pretty much what I'm looking at on Bitcoin. It's not too much, except you kind of have an ascending. I haven't even looked at the 1 hour yet, but if you maybe like anchor it like that, let me turn this to purple again. If you want me to look at anything, just type it in chat. But you kind of have this ascending triangle, which is bullish. It's a good thing. It means that your demand is rising, but your supply is at the same level. So the more that this goes up, the higher likelihood or higher probability that it'll break to the upside again. That's actually exactly what you did. It's not really charted on the 1 hour. I believe I have it on the 4 hour. That's what you did before this $2,000 run up. So could you do that again on the 1 hour? Maybe. And if you break 13,200, there's literally no resistance for like another 400 bucks. But it's going to be hard to break 13,200. I don't think it's going to be as easy as we broke all these resistances. But if you do break it, that's obviously great. So that's what I'm looking at on Bitcoin. If this does play out, maybe it can go higher. But the 4 hour is implying that this might break, and we might see like a bull flag or some sort of retrace. AAL and Guild, bro, 100%. I've owned both of those in my retirement account, so I'll definitely be looking at them. I even posted a Gilead chart today, and I posted a lot of AAL, so yes, I'll go right to those. But that's Bitcoin, and I'm just gonna do SPAQ because I know a lot of people here might be wanting to see it. VLDR is already going to be like I was gonna do VLDR third, because I posted a trade setup on VLDR on my Twitter, so VLDR is really looking good in my opinion. But just to run through SPAQ, really, actually, you know what? I think I'm just gonna go through the chat requests first, and then I'll come to SPAQ, unless somebody else requests SPAQ. But SPAQ is also, it's okay. It's not as good as it looked 2 days ago. A lot of selling came in, but I'll get back to this in a second. Let's go through the requests. Romario requested AAL and Guild, so let me do AAL first, and I already have both of those charted for you, so it'll be probably a little bit easier to run through. I'm just looking for where I have AAL. Here we go. So AAL, let me take out this Fibonacci, just makes it confusing. It's in this weird like triple level range. If you look, you have failed to break $14 since August. So it's been a long time since you've been under over $14. So that's something to look out for. At the same time, you've been using 1266 as a support. If you see here towards the end of August, you bounced off of 1266 a lot of times. And then on an even lower level, you also have a 1207 support, which is kind of from the end of September, but you recently bounced off of it just about a week ago. But yeah, it's looking okay in terms of the oscillator. Wow, you actually have hidden bullish divergence, which, let me make this screen. That pretty much means you made a higher, actually no, because it was lower at this point. So that's more like hidden bullish convergence, which means the oscillator is doing the same thing as the price action. It would be hidden bullish divergence if while we made this lower low on the MACD, we made a higher low on price. But that just did not happen, unfortunately. So nothing on the oscillator, nothing on the RSI. You are in a pretty good territory on your RSI. You're about 63, which is pretty hot, not too bad. But yeah, you're just in this range between 1266 and 1403. If you fall under 1266, 1207 is a great support, and if you break 1403, you could probably come up to test this 200-day moving average. And in terms of what the measured move of that breakout would be, a measured move just pretty much means when you break out, how significant the breakout is. So that's a 10% run up to break out. If you were to break out, the target for that would be 1543, which is also right around where the current 200-day moving average is. And look at that, you reversed at 1543 in June, and you also almost touched it in August. So if you somehow break $14, that could be a good target. So that's AAL. We're going to be doing Guild next, then VLDR, then SPAQ. I'm just doing it in the order that it was requested. So let's head on over to Guild. Great trade. The FDA announced today that they have approved Guild for a treatment, and I personally own Guild. Just being straightforward, I own this asset, and Guild looks really good in my opinion. So you had this gap up after hours. It could be a breakaway gap, so don't worry too much about that. I think the price actually ran up to like 64.50. TradingView is not really showing the exact after hours price, but here's what I'm looking on the daily. You pretty much have this descending channel. You have 2 touches on the top, literally 3 touches on the bottom, and you bounced. So basically it's not showing the after hours, it's showing about $60 after hours. You came all the way back over this resistance, so technically after hours you broke out on Guild. At the same time, you have RSI classic bullish divergence, which means the price went down, but the RSI is going higher. You can barely see it here, but if I zoom in, you can see the RSI is consistently making higher lows. And the way that I'm pretty much looking at the potential profit on this trade is 3 different levels. If you see, you have a lot of straight up, straight down action with a few resistances. You have this first resistance at $69, which is 13% away. Look how many times you reversed over there. Then you have the $80 resistance, which is, from March of this year, you failed to break that a lot of times. And you also failed to break it back in August of 2018. And then finally, when you do get above that $79 level, you reach about $85. You did that in August 2017. You even passed that in January 2018. And you recently did that in April of this year. And then another thing that I'm really liking about Guild, if we go back in time, you have not been under $57 since 2013. You have not fallen under $57 since 2013. That is actually insane. High reward to risk areas over here, which is why I personally own it. And I don't know if it'll hit all these targets, but if it does truly break out of this structure with the divergence, I think it looks great. Now we're going to be going on to VLDR, and I actually posted a trade setup on VLDR. So I'm going to show that to you guys right now. So VLDR, I completely charted this thing out just a couple hours ago, and it looks pretty good in my opinion. So let me run through the whole entire breakdown of VLDR as fast as possible so we can get to SPAQ. Let me just get some water. Okay, so first thing you have is a major horizontal support, which is between 1330 and 1250. You bounced off of that level in July to run all the way up to 24 bucks, and you bounced off of that level at the end of July to run all the way up to $32, and now you're once again back at that level. You also have a falling wedge, which pretty much means the price is contracting as it goes down, which is implying a 70% chance of it breaking out to the upside. And then I also charted some horizontal resistances. You have 1534. As you see, it used to be a support, but it turned to a resistance. It was also a resistance in August. Then you have 18 bucks, which has been a resistance since like June. You failed to break it a lot of times, and you also recently failed to break it in the beginning of this month. And then finally 2196 is like the last target because you have a gap. If you could see right over here, you gapped up and you did fill it, but usually when you have gaps like that, as you can see, it's just straight up, straight down. So you see over here it was straight down to fill it, but if you get to this level, you know, you could come back up because it's just straight up, straight down at that level. The 3 times you've been over here, you just went straight up, straight down. So that's how I'm looking at VLDR. You also have classic bullish divergence in your MACD and your RSI, which again just means you had a higher low on your oscillators, but you're making lower lows on price, which means the lower the price goes, the less negative momentum there is. And then finally, the targets. I did some Fibonacci. The way to target a falling wedge is a 50% retrace, which would be at 19 bucks. But remember, we have that horizontal resistance right under 19 bucks. So that's the long-term target, about 1880. It's a 9 reward risk to reward, which means you stand to gain 9 times more than you're risking. And then in a more of like a midterm trade, I'm just using this little 1534 resistance that I just previously talked about. And yeah, the entry is like this little green box area, and then your stop loss, which I definitely think you should have a stop loss on this, just because of how uncertain the market is, and also the fact that it's a SPAC and a lot of SPACs are dealing with issues, and also it's just in a really nasty downtrend. So I would definitely recommend a stop loss if you choose to take this trade. It's not 100% certain, it's just a high probability trade, and the stop would be about 1229 because that's right under your low of today. You can see over here in the bottom right, your low is 1241. So 1229 is a little bit lower than that, which pretty much means you broke the major support that I'm talking about, which would probably also cancel your bullish divergence. So that is VLDR. As you can see, there's so many things to work with here. High probability trade, but not 100% certain. And if you want to just look at this picture or screenshot it, you can do it now. But also, if you look at the bottom left, my Twitter is there, and I posted this chart to my Twitter just a few hours ago. Literally just looked at this chart around 8 p.m. Eastern. So it's looking good. I like what VLDR is doing. It's literally dropped all the way from 32 down to 1334, which is a 60% drop. So it is a value area, but you really need to bounce off this support. Thank you, Romario. Got you, man. And now let's move on to SPAQ. Now SPAQ, man, I really like the fundamentals of this company. If you see over here, I charted all the different news catalysts and fundamental type stuff. If you want to take a screenshot of that, go for it. I just talked about the catalyst future, the Fisker Ocean, which is their current SUV model. And I also talked about just like the business standpoint with Fisker and Apollo. So you also have Magna in there, which is going to be manufacturing Fisker's cars, so you don't need to worry about manufacturing issues. They're very well known in the automotive industry. From a fundamental standpoint, everything looks good, except for the fact that you really have to wait at least 2 to 3 years for them to start making good revenue because their cars just aren't coming out yet. But when Fisker was on Mad Money, he was saying that no other electric vehicle can provide the same quality that they do at a starting price of $37,000. which even if that is 2 years away, it is going to be extremely unlikely for any other car manufacturer to drop an electric vehicle at that price with the same specs as the Fisker Ocean. So yeah, that definitely is an issue. Also, the fact that it's a SPAC, a lot of SPACs have been dumping, so that's another risk. I'm just trying to get through the risks before I go into the good stuff. And also, you're just dumping like crazy. So there is a lot of risks, and I know a lot of people are already locked down. So I didn't even want to post the chart until it got to about 1180, just to prevent people from losing money. Even though it did look good at certain times, it just kept on dumping. But finally, I dropped my revelation of this falling wedge, and initially I had the demand line. Let me try and move this up a little bit. Initially, I had the demand line charted. How did I chart it? I think I charted it like this. So I had it like that, and you obviously broke out of that. But then, during the lowest point of the day, you bounced off of the 1108 support I've been talking about for 2 days. You literally went to touch my 1108 support, which I said was a great area for it to bounce off of. And for now, you have bounced off that area. Hopefully it can hold. We will see tomorrow. But then I just readjusted my falling wedge a little bit differently. It doesn't look too different, and if the price starts bouncing off this area, you could say it's still valid, but again, you need the price to start bouncing off of this area, man. It's already down a lot, so hopefully a reversal can be pretty soon. And then in terms of the classic bullish divergence, you kind of during the dump, not today but yesterday, you kind of like canceled it out with these two increasing amounts of negative momentum. But then on the 4-hour candle today, in which we bounced off my 1108 support I've been talking about, you did have one wick that was a little bit lower. So it's pretty much the same deal. Unconfirmed MACD classic bullish divergence. You just really want to see this red island turn to green. And when it does, I will make sure to notify you on Twitter, which is in the bottom left of your screen if you want to follow me there. But it's looking okay. I just, every time it looks good, it's just been dumping. So, I have to say everything with a grain of salt. It's not 100% certain. But you do have the falling wedge. You have the potential classic divergence. You're oversold on the RSI for the second time ever on the 4-hour. So that means there's a lot of room to bounce to the upside, because you've been all the way at 95 on your RSI, and you come all the way down to 24. So there's a lot of room in terms of the relative strength, which is the RSI. There's a lot of room to move back up. And then also, I guess you could maybe, if it continues to reverse to the upside just a little bit, you can maybe consider that RSI classic bullish divergence. But again, you just need more data to confirm that. I'm just putting it out there. Let's go back to the chart itself. What I really want to do to close the week is close above 1165. Now, 1165 was the first support that I was talking about, and it did hold. As you can see on this candle, it reversed off 1165 and then went back all the way up to 1254. So that could have helped people optimize their positions, cost average, stuff like that, or even sell some more and then buy lower. So there was some use in that support level, but you eventually broke under it, which it leads me to think that next time we test 1165, it might take some time to break through it. So what I really want to do is close the day over 1165. 1165 is where you bounced off of at the end of July. Sorry, my voice. When I talk a lot, it just gets weird, man. I don't know. I don't talk this quick, this often, so I'm trying to get used to it. But yeah, you bounced off this level in the beginning of August, and you ran all the way up to $18. So hopefully we can close back above that level. I think that'll definitely help out the argument, and that would also bring up the moving average and or the moving average convergence divergence, which is your MACD, and the relative strength index, or your RSI. So that's my look on SPAC. Sri Ram, welcome to the stream. KCAC, got you. That pretty much wraps up SPAC, so we're going to go right into it. And this is actually, I think, the best start to any of my streams. It's only my 3rd day streaming, so make sure to drop a like. I'm really hoping to help out a lot of people. I'm not monetizing or making any money from this, so all I ask is that you just maybe drop a subscription so I can continue doing this. So here we got KCAC, newer stock, and let me let me tell you, man, I like what it's doing. I really do like what it's doing. First thing off the rip, confirmed classic bullish divergence on the 4-hour. You could even technically call this triple classic bullish divergence on the 4-hour. If you look at it like that, you've consistently been going lower in price, but you've been making higher lows on your MACD, which is great. That's awesome. And then also on your RSI, you also have classic bullish divergence. So you have confirmed classic bullish divergence on your MACD and RSI, which is very good on the 4-hour. In terms of the daily chart, so you just pretty much started out with negative momentum after the IPO or the gap up, and you were really close to going back to green for the MACD crossover, but it seems like you had a negative 3% day today, so that kind of ruined it. But of course it can, if it has a good day tomorrow, it can continue going to positive, just something to note. But the 4-hour oscillators look really good. It looks like you actually already broke out. Oh no. Maybe, honestly. Maybe. It depends if you anchor the resistance like this, which I think would be the right way, because you have 1, 2, 3, 4 touches. But one could just play devil's advocate and say you gotta anchor it like that, which pretty much means that you have the first touch, the second touch, and you're currently working on the third touch. So I'm gonna be a little bit conservative with this chart. I don't want to be too ahead of myself, so I'm gonna do this the conservative way. If you look at it like this, it did already break out, but I'm just gonna say it hasn't broken out yet, so you can get even more confirmation. So basically what you would want to do at that point is break over 1537. Now 1537 was your resistance on the 21st of October, and it was your support on the 5th of October. So you want to break back over 1528, and I really do think the bullish divergence on the MACD and RSI can help you do that. You don't really need to worry about the support because this is already working on breaking out. Just if you want to see what the support would look like, it would be something like that, I guess. Kind of a falling wedge, but also kind of just a descending channel, kind of in the middle. But yeah, you're working on a breakout. You have classic 4-hour MACD and RSI bullish divergence. So yeah, man, if you can achieve this breakout, the way to target the structure, if it does in fact break out, would be a Fibonacci going from the highest point, basically the swing high of the structure, to the swing low of the structure. The target, if it does break out, the target in time could be $18.36. You actually did reverse right above that. So you previously used that $18 range as resistance, so that could be another area where if it does break out, it could run back up to and maybe fall back down over there. Yeah, it doesn't look bad, honestly, especially for a new stock with the low amount of data. Looks pretty good, but you just really need to get above 1528. So that's my look on this asset. I'm also going to talk about support, at least locally. I'm just going to make this the same color so it doesn't get confusing. So in terms of local support, I'd say probably run it like that. Basically, you want to stay above 1320-ish. And you did have a gap on the 1-hour. So maybe at open or something, or pre-market, might just fill this gap. Let me just skip this song. So maybe pre-market or when the market opens, it might quickly fill this gap, and then maybe even come down to test this local low time frame support, and then it might bounce there. So that's what I'm just looking at in terms of like a small little support level. But yeah, you definitely want to be careful if you broke back under $13. Because if you break under $13, which is already 10% away, it's literally, there's no support. Like, there's literally no support. I guess the only support you would have if you broke under that would be where you gapped up to, which is called a breakaway gap. That would be like 1257. So yeah, your two supports is like 1320 and 1257, and you're working on breaking out currently. So that's my look on KCAC. Pretty good. Actually, let me keep that on my watch list. I want to keep on monitoring that. Really like the divergence. Let me just fix some stuff up. Can you look at XPEV and BNGO? Yep, I got you. I'm gonna do that right now. I'm just trying to keep my stuff organized. Does that look good? Say that looks good. I'll just leave it like that for now. Make sure to save it. Alright, first we got XPEV. Again, anybody in the chat, if you want me to look at anything, just type it in chat. Right off the rip, again, you have divergence, but a different kind of divergence. Hey man, you're picking all these stocks with good oscillators. Good job, Sri. So you have hidden bullish divergence instead of classic divergence on this chart. Let me just try and make that as clear as possible. Now what this means is you made a higher low on price, but you made a lower low on your oscillator, which is a bullish thing. You did that on both the RSI and MACD, so that looks good. Romario, thank you for the comment. I will definitely look at space. And just a reminder, guys, if you support what I'm doing, all for free, make sure to like the video, subscribe to my channel, and check me out on Twitter. That's literally all I ask for. But let's keep it going. You have hidden bullish divergence on the 4-hour. No divergence on the daily. You want to be careful because if that goes to red, it could definitely be a negative thing. But today you actually had a bullish pin bar candle, which is, as I just said, bullish. So that is good. So while you do have good candles, you even have a bullish engulfing candle on the 4-hour. You have good candles and you have good oscillators. The price action on the chart itself, in terms of a pattern, doesn't look the best. So I say kind of line it up like that, and then take the bottom and then line it up like that. You're kind of in like the mid-range of a rising wedge, which is a bearish pattern. But of course, you just want to make sure that it does not drop under this support line, this upsloping support line. So as long as you stay above that support line and your oscillators look good, your candles look good, the probability says it'll keep going up. But once you get to about this range of your rising wedge, there's about a 70% chance that it'll break to the downside. So just keep note of that. And then on this, at the same time, your daily oscillator is showing a little bit of exhaustion. So what this chart is overall implying is short-term price continuation to the upside, but mid-term there could be a decently sized pullback. Now we're going to do BNGO, and then we're going to move on to space. So let's head on over to BNGO. This is a health technology or biotech company. So there is no divergence on the 4-hour. And no divergence on the daily either. So oscillator is not great. In terms of the macro, I'm gonna have to look at the daily. I was talking about this yesterday, but fundamentally, when an asset drops from $10 to 54 cents, there has to be something horribly wrong going on with the company. So that is obviously a risk that I don't even know what this company is, but that's obviously a risk while looking at this asset. Just want to put that out there. But in terms of the local area and the very short term, because in the long term this could keep dropping down, I'm just being completely honest, not a good trend. In the short term, You definitely have a resistance I can see, which is right around that level. So 71 cents is your resistance, or it could also be a sell order type place. And one thing it could potentially do if it starts to continue catching bids is make a double bottom. That's literally only 75% painted though, so you cannot confirm that until it continues to move up like that. And just for educational purposes, I'm not saying it's going to do this. If you have a double bottom, the way to find like a sell order for that, I don't know why it's doing that. The way to find a sell order for a double bottom is you go from the lowest point of the double bottom to the resistance line, or what's known as the neckline of the double bottom, and you take that size of an uptrend and you put that over. Let me fix the song real quick. You basically put that over the neckline, and then if you eventually somehow break 71 cents, the next target would be 95 cents. Now it's a good target because it's a psychological resistance, being right around $1, and you also reversed to break. You failed to break that level on July 24th, so that's another resistance. But I am not trying to say that this is going to go to 71 or 95 cents. There's no edge on the oscillators, and it's in a really big downtrend. I'm just trying to show this for educational purposes. Just trying to reiterate that, so don't take what I just charted too seriously. And we're going to be looking at space in just a second, but I want to actually give a breakdown for this real quick. I'm really trying to think of like what the pattern could be, but if I'm being honest, it just kind of looks meh. There's just nothing on the actual candlestick chart itself that I see being bullish. So the only thing that I would say that this thing currently has going for it is a potential double bottom. Hope that kind of helps. It's just not too much for me to work with there. Now, Space Virgin Galactic has been very good to me in the past. As you can see, I already have it charted. I've traded this quite a bit. But let's get to it. So, you have potential hidden bullish divergence on the 4-hour. You have that on the MACD and RSI. But I'm not going to chart that because who's to say that it opens bad and it just continues to make negative momentum. But you can definitely keep that in mind, that it does have a potential chance at making hidden bullish divergence. And in terms of why I think Space recently just pumped, I think they had a news catalyst with the analyst raised the price target or something. But I've been looking at this for a really long time, and again, for educational purposes, I want to show you exactly from a charting standpoint why this recently had a crazy run. So since the inception of Space and this massive pump, you created a very clear resistance line. You basically anchor the top point, and then you take it to the second point. Ram, thank you for the subscription, means a lot. So yeah, you basically take the top point, and then you go to the middle point, and you create this resistance line. And it managed to break that resistance line, and after it broke that, look what happened. 16% in a matter of about a week, which is obviously great. But another thing I was noting was you were also at a 61.8% retrace. That's a Fibonacci golden ratio retrace, which is pretty much a universal code. And it's a common area for literally any asset to reverse. It pretty much means the asset is on a 62% sale from the last swing high to the swing low. So that's always a good thing. As you can see, the swing high over here was around $28 and the swing low was around $8.89. And what I mean by swing high and swing low is like the local areas of the place you reversed. So you achieved a 61.8% retrace, and that is exactly where this pump started. As you can see, the 61.8% retrace was on 1608, And eventually, after consolidating at that golden retrace for so long, we ran all the way up to 21. And since that retrace, if you were buying simply just because of that retrace, which obviously you should be looking for more indicators, but if you did 51%, so that just goes to show how reliable Fibonacci is and how real it is. From your golden retrace, you went up 51% in barely any time. So that's just Fibonacci, and that's just like the why this had already broken out. But here's what I'm nervous about. While you broke out, you created this support line. You had 3 very clear touches on it, and then unfortunately, on the 21st of October, which was 2 days ago, you broke under it. So in terms of the very short term, and I'm talking like 1 to 2 weeks, that's really not good. You had an uptrend and you broke out of it. That's the simplest way to put it. In terms of support, I don't see a lot of support until about $18.39. So that is a good area of support, which is unfortunately like 10% away. And also at that area, you have your 200-day moving average. So that could be a great area for a space to reverse back to the upside. But until it starts to show some more signals on the oscillators, I would not say this is the best area to get in for the short term. And then just to confirm on the daily chart, yeah, it just pretty much looks the same, not too different there. So that's what I think about space. You could see a short term pullback, but in the long term, let me just remove this for a second to make it clear. In the long term, you're in a pretty steady uptrend. There's no really clear supply line for this uptrend, but let's just make it clear. Let me just show another educational resource just trying to help people out. For so many months, you were making higher lows. Higher lows are bullish. It means over time, more demand is coming in and less supply. So eventually, when you consistently made those higher lows, look what happened. You had a pump, 50% pump, higher lows and 61.8% retrace, and you pumped. So I just wanted to show that. But yeah, short term, I don't think it's looking too great. Long term, it's looking pretty decent. Okay. Can you show how and when to use Fibonacci? So that's a great question. Right off the bat, I'm just going to let you know I made a full free course. It's on my YouTube channel, and I believe the 6th video of the course is like a full explanation of Fibonacci and how to use it. So make sure to check that video out. It's like a 7-minute video of just straight Fibonacci, and I show how to use it for both buying and selling. So I can definitely help you out a bit. But since I don't really have too much else to look at right now, I'm just gonna give you like a little example. So, oh yeah, this is Piton. Before I do that, I'm gonna kind of do it right now, but just look at Piton for a second. You have a parabolic trend. You absolutely crushed it from $18 up to $135. I actually tweeted out a buy signal for this at $81. So since I put out that buy signal, it ran up 70%. So yeah, if you want to get those buy signals, make sure to follow me on Twitter at Chan5. But look where Piton ended up reversing. I charted the Fibonacci, and basically this is how you use Fibonacci to find the sell target. You take your swing high, which is the highest point you make during a rally before it reverses, and then you take your swing low, which is the lowest point in a dump before it reverses again, and then you look at all the different Fibonacci levels, and then every single one of those levels is a potential selling area, because it's just a universal code, I guess. And it is very uncommon to get above the 1.618, which is again the golden ratio, but for selling. The golden ratio for buying is a 61.8% retrace, and the golden ratio for selling is a 1. Well, it's kind of weird. The golden ratio is always kind of the 1.618, and the golden retrace is the 0.618. it gets a little bit confusing in terms of vocabulary, but both the 0.618 and the 1618 are the strongest levels of Fibonacci. But of course, the 786, the 382, and the 236 are also good levels, and the 50% retrace is not actually Fibonacci. It's not under like the mathematical code for it, but it just means that you went halfway back up or halfway down. And then just for educational purposes, you ran all the way up to your 2618, which is pretty much double your golden ratio. And look where you reversed, right at your 2618. Now obviously, there was no resistance there. It's all-time highs. So how could people know where to sell? Well, Fibonacci would give you the answer to that. So 2618 Fibonacci is where you reversed, and now you're currently testing the support line of this parabola that is in. But yeah, there's really no buy or sell signal on Piton right now. It's just extremely crazy, so I'm not gonna put anything out like that. But that's how you use Fibonacci to find sell targets, and I'm about to go over buy targets. Romario says, alright, last one, champ. Which stock is on your screen you're most excited about other than SPAQ? Thank you, Leo Landscaper, for the subscription. Appreciate it a lot. So Sri, if you're still watching, before I go over how to use Fibonacci for buying, I'm just going to answer Romario's question. The stock that I'm going to go over, I'm not going to fully go through them because I really want to get to the Fibonacci education. But I did go over it recently in the stream. I don't even own VLDR, but I was looking at the chart today, and I have this full trade setup. And this is one of the most bullish charts I see in the stock market right now. Obviously, the risk here is that it's in a crazy downtrend. But just to recap, within like 20 seconds, you have a horizontal support, bullish divergence on the MACD and RSI, and you also have a falling wedge. So you have three different major indicators pointing to the upside, and I already charted out the selling areas, the stop loss area. If you want to see like an actual full picture of this instead of having to take a screenshot, just visit my Twitter, twitter.com/championvibe, and I posted like a full screenshot of this. But this is definitely one thing I'm looking at. And one other thing I'm looking at is VSTO, which is like an outdoor hunting ammo type company. The Stockwatch 2 is another YouTuber. He's the one that actually brought this up, and I pretty much, like, I'm just giving credit to him. He's the one that pretty much called this, so I'm not trying to take credit for this trade. But you did ask what's looking good, so I am excited about this. Basically, you have almost confirmed hidden bullish divergence on the MACD, and you also have an ascending triangle, which is a bullish continuation pattern. And I already charted this pattern. If it does eventually break 2270, I don't know if it will. A lot of things can happen by then. If it does break 2270, your first sell target would be 2491, simply because that was your last major resistance. You reversed there on August 8th, and then your second target would be the measured move of a ascending triangle, which is about 2844, which pretty much means you go from the lowest point of your ascending triangle to the highest point, and then you copy and paste that on top of your resistance, and that's your measured move. So basically, the easiest way to put this out there is continue to run up this upsloping demand line or support. Let this MACD go over to green, and then you'll come to test 2270 if those two things happen. And if you break 2270, those are your targets. Again, nothing is ever 100% certain, but that's just what the probability is directing me to think. Okay, I still need to go over how to use Fibonacci for buying. Leo, thank you for all the support. I'm going to go over SPAQ just because you're talking about it, but I am going to get back to the Fibonacci. So yeah, as you can see, I used Fibonacci here to find sell targets. Just really quickly, the way to target a falling wedge is a 50% retrace. So if eventually we break this downsloping resistance line of SPAQ, the first target would be 1460. The other three targets I have is 1254, 1355, and 1533, which are all horizontal resistances. So yeah, SPAQ, just go over it again really fast. Hidden bullish divergence on the MACD. RSI also kind of has hidden bullish divergence, but the issue is neither of those are confirmed. You needed to start catching bids for those to confirm. You have two horizontal supports. You broke the first one. So in the short term, 1165 could turn from support into resistance. So look out for that. But I did say 1108 is a good bounce area, and that was pretty much a few cents off, but that was pretty much where the low for today was. So what I want to do is continue to hold above 1108, maybe develop this classic bullish divergence, and run up to test this supply line, which is conventionally, or conveniently, I think I just used a completely wrong word right there, but conveniently right around the merger vote time next Wednesday. So yeah, falling wedge with one major support, and the risk to reward here is crazy because the redemption shares for SPAQ is $10. So you're risking on this trade, if it does respect the technical analysis and it does listen to the probability of this structure, you're risking 10% to gain. Remember, the breakout is a 50%. You're risking 10% to gain 30%. So you have a 3-to-1 reward to risk. You always want to put yourself in a position to get a reward of at least more than 2.5 times more than your risk. So that is SPAQ. And then I have the different news catalysts over here. If you want to take a screenshot of that, go for it. And yeah, SPAQ looks good, but it really needs to bounce off 1108. Like, this thing has gone down so fast, so badly, and it needs to start getting in some demand so the bullish divergence can be confirmed. But to end up the stream, I'm just going to go over how to use Fibonacci for buying. I'm going to do it really fast, but if you want a really in-depth look at Fibonacci, which is basically these colored lines, that is a universal code in trading and all around the universe, hence the universal code. If you want to learn all about that, go to my channel. I have a free course on technical analysis, and that's course video number 6. But just to end it up, let me look for a chart that has a good Fibonacci area. Okay, so this is just a random crypto. Don't worry about it. Don't worry about what the actual asset is. I'm just trying to do some education right now. So you have this structure and you're looking for a place to get in, and let's say you have classic bullish divergence, you have a nice pattern on your chart, and the volume looks good, your RSI is good, but you want just one more edge, and you want to know how much this asset has retraced, how much of a sale it's on. You take your Fibonacci tool called Fib Retracement. Again, I'm using TradingView for anybody wondering. Then you take your swing low, which is pretty much the lowest point before you start reversing in the short term. You take your swing low, you click there, and then you move your cursor all the way to the top to your swing high, which was the short-term place where you reverse to the downside. Basically the bottom and the top of the support and resistance. Now, as you can see, this current asset is at a 50% retrace or a 0.5. Once you achieve a 61.8% retrace or above, it's considered a deep retrace, which is a very good sign. But the best retrace to bounce off of, the most common one to bounce off. Whoa, my voice. Again, I'm not good at talking for long. But the best place to bounce off of is the golden retrace, which is 0.618. So that's where you would be definitely, in terms of Fibonacci, the best level, but you need a lot more indicators to go alongside that. The more indicators you have on a chart, the better. And then, let's say we're not doing it for swing high and swing low. Let's say we want to do it for the whole entire chart, okay? Now, obviously, this asset went absolutely insane. This is just a crypto that went from like $1.50 up to $10 this year. Absolutely insane. And let's say you want to know how much of a retrace it's at. So let's start it out from the first initial major pump, and let's go all the way up to $10. So as you can see, you retraced a whole lot, and you actually ended up making an inverse head and shoulders, which is a bullish pattern. You made an inverse head and shoulders. I believe at the time when it was on this right shoulder, you had bullish diversions as well. But you just wanted one more thing to confirm that this was a good place to enter. Well, guess what? You were at the 88.6% fib retrace, or you were in between that and the 76, which is another deep retrace. And since then, the price has gone up 15%. So the Fibonacci just helped to verify the asset. So that's how you could definitely use Fibonacci for buying. I'm not sure how high this price will go. I don't know if this will play out, but I'm just mainly doing some educational stuff right now. Let me just go back to the previous chart I had because I don't want to lose all the stuff I charted. Probably going to take a second. Okay, come on. Alright, there we go. So that's my current chart. And since this recently just broke out of a descending channel, you can use the Fibonacci lines here as selling areas. And here we go, one more time. This thing broke out of its channel, but guess where it found resistance? You went from so you basically take, let me just do this from the start. You take your swing low of the structure and you go wait, I think I did that wrong. Wait, how did I have that? Give me 1 second. Okay, yeah, I was just doing that opposite. Basically, you go from the top to low when you're looking to sell, and you go from the bottom to high when you're looking to buy. Okay, so when you go from swing high, which was around 390, to swing low, which was around 306, you can chart your Fibonacci. And since this broke out of the structure, it ran up and it just kept going up until it eventually went to 0.618, the golden retrace. And where was the point it reversed? The golden retrace. I'm just trying to get this in your mind. That Fibonacci is very useful if you just want a little edge when there's really either not much else on the chart, like how we had on, I'm trying to find it. Give me 1 second. Man, I have so many things on my watch list. I'm gonna look at your comment in 1 second, Tarek. Or Tariq, however you pronounce it. Sorry if I said it wrong. On Piton, it was an all-time high, and you reversed at your 2618. There was literally no other indicator telling you to sell at that level, except for the Fibonacci. So it really helps when you either have nothing else on the chart, and you're in an asset, or if you already have a lot of things on the chart and you want some more confirmation. So that's what I'm really trying to help you guys realize about Fibonacci. If you want to learn more, it's course video number 6 on my channel. Check that out. Let me just get some water. And that's my whole breakdown on Fibonacci. I said it would be short, but I digress. So Tarek said, yo, you looked at Link yesterday, I think. Could you show me how you TA on Link? For sure. So Link was another big runner earlier this year. Yeah, man, have a good one, Leo. Have a good night. Have a good day tomorrow. Have a good weekend. And I hope to see you soon again. Thank you for supporting the stream. So let me look for Link. I know it's already on my watch list. Alright. Okay, so somebody actually DM'd me on Twitter, basically asking me to chart Link for them. And they asked me to chart Link right when it was here. Okay. So when Link was right at this price, somebody DM'd me and said, hey, can you chart Link for me? And I did. And I noticed it was in an ascending triangle, which pretty much means you have rising demand, the same level of supply. And you also had a little resistance level at 1031, a horizontal resistance. So I pretty much told the person, there's two scenarios. You come back down to test the demand line and then bounce there, or you break past this resistance and it can run. And it did scenario number 2, it broke past the resistance I charted. And since it did that, it went up 20%. And that's just in the short term. The actual measured move for this whole entire pattern on Link, which is the ascending triangle, is insane because it's a big ascending triangle. The measured move is, let me chart that real quick. I only like charting the measured moves after an asset breaks out, but your measured move is 1525. Now the issue is you have a pretty decent resistance at 1337. As you can see, you failed to break that 3 times. So honestly, I wouldn't even really look at the measured move unless you ended up breaking 1337. So just kind of ignore that for now. But since we did break out of this ascending triangle, I would say the target is 1337 because there's literally no other resistance there. That's pretty much the best I can tell you. And then again, for educational purposes, let's look at the Fibonacci here. Guys, you cannot make this up. The last 3 times I looked at Fibonacci, it was a 61.8% golden retrace, which is what I'm trying to help people understand. So you basically go from your swing low to the previous swing high, and look where it reversed. Just look. If you literally just only used Fibonacci, which you should obviously never do, but let's just say one person did, and you literally just bought 61.8% golden retrace, it literally bounced off that level and ran up 20%, more than 20%. So yeah, I'm just trying to help spread the knowledge, I guess. I don't really know how to put it, but that's Fibonacci. And yeah, Link looks good. Is this the place to buy? I'm gonna be honest, probably not. But if you were already in, congrats to you. I'm just gonna say this is not the place to buy because this is approaching a sell target, so you don't want to buy when something's approaching a sell target. And there's always more opportunities. If it goes up to like 15 bucks, yeah man, you missed out for sure if you didn't get in before the breakout. But there's always other opportunities, and you're just preventing yourself from buying an area with more probability to the downside. Like once you get to 1337, which is about 10% away, there's a high probability that it'll reverse to the downside. And you already ran up 26% with pretty much just like a straight line up. So there really is no buying indicators currently. There was also classic bullish divergence. As you can see, you made a higher low on your oscillator and you made a lower low on price. And it's really convenient how the person DM'd me on Twitter, as I said, literally on this candle right here. He DM'd me, and since then it went up 30% because you had the 61.8% golden retrace, you had the classic bullish divergence on the 4-hour, and you broke the horizontal resistance of 1031. Oh, that must have been you? Yeah man, let me just check, maybe it was you. If it was you, I'm mad happy because it's been playing out. Yeah, it was you. Yeah. Alright, well at least you did, well you said buying more, so I assume you already had some. So that means you're currently in profit. And yeah, the first sell target for your trade, if you bought much lower, I would say probably just would have been the supply line at 1132. So if you didn't take profit yet, just be cautious that it's up a lot and profit is always profit, but at the same time, a good sell target is around $13.30, maybe a little bit lower because you have these 2 little wicks, but that could be a good selling area. And yeah man, since then it just crushed it. NAKD, got you. So yeah, that's Link, looking good, but just it's looking good if you're already in it, but it's not a buying area for somebody who's not in it already. Just for fun, we are looking at NAKD. Wow, man. Absolutely crazy. I'm just gonna show this, but it's literally just gonna be 99%. Yeah, 99%. If one bought this at 11.24 or whatever the high was, you would have lost all of your money, except for maybe 50 cents or something. So I'm gonna be honest, every time I come across a chart that looks like this, I don't even try to analyze it. Like literally, if an asset is doing this, there has to be something horribly wrong with it. So yeah, literally no edge. It can keep dumping, it could have a random rally. I have no clue. This is the one time where technical analysis just doesn't matter. No matter what the chart is showing, the macro is just so bad that just when I see this, I click the X button. But yeah. Give me 1 second. Alright, but I think that pretty much goes through it all. So I think I'm going to end it right there. Thank you for coming out. Make sure you subscribe. And I'll see y'all later.